Money, Money, Money Insurance Special, co-presented by Exide Life Insurance.
Hello and welcome to Money, Money, Money. I'm Sumaira Abdi. We've covered many different kinds of insurance over the last few weeks, and here's something that's going to be interesting for the professionals. If you're alleged to have provided inadequate advice, services, or designs to a client, professional indemnity insurance or professional liability insurance provides cover for the legal costs and expenses in defending that claim, as well as the compensation payable to the client to rectify that mistake. Vishal Dhawan, founder of Plan Ahead Wealth Advisors, joins in armed with everything that you ever needed to know about professional indemnity insurance. Vishal, thanks very much for being a part of our show. And thanks also for introducing us to a concept or a different kind of insurance that a lot of people are not very familiar with. So I want to start off by asking you, is this something that you recommend to a lot of your clients?
Well, I think there's a very large segment of professionals who have personal finances and their business kind of linked to each other very, very closely.
Okay.
So they could be doctors, chartered accountants, management consultants, lawyers. A lot of these people are actually running an abnormally high risk on their personal finances if they aren't able to separate out, risks associated with one of their patients or their clients actually coming out and saying, we got deficient service from you. So it's certainly one of the things that we go out and tell each of these people to buy. In fact, to add to that, I think what we've seen is a lot of the associations that these professionals are members of are also playing a very active role in promoting this and making their members aware of the fact that they need to protect themselves against something which could either be negligence or just a error or omission and a mistake. And therefore what ends up happening is that you run, obviously in addition to reputation risk, also monetary risks in the process.
So is this more of an H&I product?
Not really. The way we look at it is the premiums are very, very small, and this is relevant to every professional irrespective of the size of his business or practice. There could obviously be limits that you can choose depending on what's the scale to which your practice is run. But we've seen some very, very small covers being run, and the premiums are also very, very reasonable.
So what would be the average premium? I mean, what would be the average sum insured and what would be the average premium?
So the average sum assured would be between 20 and 25 lakhs. We see a lot of that happening in there. And the premiums typically come to about 4,000 to 5,000 rupees a year. In addition to that, you also see, when there are association tie-ups that happen, which work like group insurance, you could find that the costs come down even further. So what we've seen is relative to what you're protecting, the cost of insurance is very, very marginal.
This is a policy that has to be renewed annually.
Yes, so these policies typically do get renewed annually. The important thing for people to remember is that most people understand the concept once. They kind of get it, they understand the risks, but when it doesn't actually translate out in the real world, they kind of sometimes just say, oh, so I don't really need to do this anymore. And I think that's the big risk with all kinds of insurance, that you've got to keep at it and hope that it never comes into play.
Okay, so this covers negligence. It covers sometimes, mistakes that might happen or, just oversight. Are there any exclusions to this policy like this?
Yes, there are certainly exclusions that exist. So, for example, one of the big exclusions is where there was a deliberate intent and attempt to do something wrong. So very clearly that is separated out because you can't be covering that. The second bit, which is an exclusion in here, is things which came into play before the date on which you bought this cover. And that's also important because a lot of times you may end up opening yourself to the risk that you did something which kind of created a liability on you before you went out and bought this policy. So it's very, very important to understand how this policy works, and also keep in mind that the policy needs to be constantly renewed, because what happens is when a person makes a claim from you as a service provider, as a professional, could vary. And what happens is that your policy has to be live when the claim is made for someone to actually be able to help you as far as the insurance is concerned.
Yeah, that's true actually. But tell me one thing, you know how for an auto insurance you have a no claim bonus? Is there any similar concept over here? I mean, if a claim has been made against me in 1 year, would my premium shoot up the next year? I mean, how does it work?
So actually what tends to happen with these policies is they have what is called an AOA limit, which is an per year, per accident kind of limit.
Okay.
And then they also have a per year kind of limit. So there are two limits that each of these policies cover. And what typically ends up happening in these policies is that you actually end up selecting that. So what ends up happening is your limit per claim is anyway limited by both of these parameters that are set up upfront.
Okay.
So these are typically ratios. So you could find that you could choose an AOA and an AOY as 1:1, which means that even if there's one accident, you get paid the entire amount of the insurance cover. You could choose, say, a 1:4, where you would get 25% per accident against the entire amount. So what ends up happening for you is that the way you are kind of managing cost on these kind of products is by trying to set these limits right. It's very, very important. I think there's no standard answer to this. It's like a life insurance cover, for example. So, if you kind of check what your life insurance need is versus what your neighbor's life insurance need is, or your colleague's life insurance need is, they could be dramatically different.
Yeah, but in life insurance, you have this rule of thumb that it should be like, say, 10x of your annual income.
Right.
Is there any rule of thumb over here? One, to decide what should be the sum insured, and B, to decide what these AOA or AOY sublimits should be?
Yes, so I think the way we look at it is it's a function of what's the kind of agreements that you enter into with your clients as a practice. So what you could find is, let's say, in a lot of lawyer agreements or a lot of consulting agreements, you could actually find that there are separate agreements which state that the maximum liability, for example, is equivalent to the fee that we are collecting. And on the other side, there are obviously, so you're kind of controlling your risk through the agreement that you're building in that particular phase. And on the other side, you have an insurance cover which is coming out and protecting you. So we look at it and say that typically the size and scale of your business or your practice will actually dictate the optimal amount. And we think rule of thumbs could actually be very damaging in this kind of business, because it could mean that some very large businesses or very large successful professionals could kind of be exposed to much larger amounts and have very small covers.
Okay, so it could work both ways.
It could work both ways, and because it covers legal cost as well, it's also a function of how, as a professional, you would want to sort out these problems for yourself. So if, for example, you faced any of this and you wanted to go to the best legal brain to help you understand how to protect yourself, you know that the fee is typically going to be larger. And even though the insurance company could kind of guide you to who's the right person to go to, there is a need for you to understand that all of this advice, and as a professional, everyone knows that, comes at a cost. So I think somewhere it's very, very important to customize it to what you require. Certainly, if you're not going to do anything about it and say, oh, this is all too complex, then we say just go out and buy something. But clearly we think customization is important. Okay,
and does this professional indemnity also allow for out-of-court settlements?
Well, there is an ability for you to do that. The way it typically works is that once a claim is made, it's immediately that an insurance company needs to actually go out and the insurance company needs to be intimated about this. And then typically what happens is the insurance company guides the process, because at the end of the day they have more experience in this particular space, and also because you have the coverage there, you want to seek the help to ensure that you're doing the right thing. So typically what is strongly recommended is, as soon as something of this kind happens, you actually go out and share that intimation with the insurer, and then use their expertise to run through this whole process.
Okay, so what we'll do now is take a very quick break, because we've got to know what professional indemnity is in theory. We want to know also things like, what's the claim settlement ratio like in India? Is it really effective in a country like India? I know it's effective abroad. There are many, many cases like that. But how much is it picking up in India? And there's lots more to discuss. So do stay tuned. We'll be back with Money, Money, Money in just a minute.